Good afternoon. Thanks for being here today. This is the first of a series of financial empowerment webinars that we're going to be offering. This one is meant to be a really 101 level chat and to offer you with some tips for managing your money so it works harder for you. So this is a non-judgmental space. I know that money can be kind of an uncomfortable topic to talk about. So, we're trying to just create a safe space for that and give you some tips where we're not going to judge you. So, Mihaela, so I'm Lauren Richard, the Small Business Program Director at ANCA. I'm joined here by Mihaela Nyberg, who is our Small Business Services Coordinator. We have some slides that we're going to be looking through today together. I'm going to tell you a little bit about ANCA to get started. And then at the end, we have just a little bit about some other programs we have coming up and things like that. And sorry, Britt, because you were with us this morning for our other programs, you're going to get a little bit of a repeat there. So this is Your Money for Your Life, a non-judgmental 101 level money chat. I hope everybody goes away with something that they can use today and that can help you going into the future. Mihaela, you can go to the next slide. Oh yeah, thank you. ANCA is the Adirondack North Country Association. It's a nonprofit, non-governmental economic development organization since 1955. We have about 23 staff based in Saranac Lake, New York, and across the Adirondack North Country region. Our offices are based in Saranac Lake as well. And we serve the 14 northernmost counties of New York State, which are these counties that you see here on the screen. This is our vision, mission, and big idea. We envision a new economy that works for all. We want to build prosperity across New York, northern New York, and we want to create and sustain wealth and value in local communities. So we work with a lot of different small businesses and help make them stronger so that they can contribute to our local economy because they're a really big part of that. So why am I talking to you about money today? I'm just a regular person. I'm not a financial advisor. I'm not going to talk to you about investing because legally I cannot tell you what stocks to purchase or anything like that. But I just love seeing regular people harness money as a tool to improve their lives. And I'm speaking to you from my own experience. I love harnessing money to improve my life, and it makes me feel more safe and secure. I would be honored to share what I have learned along the way with you to help you improve your life. I was fortunate to receive a very basic financial education growing up. I've taught myself a lot more along the way, and I still have a lot more to learn. So, I'm just coming to you with what I know. So I'm sure some of you know things that I don't know yet, and hopefully vice versa. So, here to learn as well. So we're going to go through, this is a pretty basic webinar, but we might come out ahead of time. We'll see how it goes, but this is a basic agenda. We're going to talk about money feels, money goals, places to start, and what's next. And I hope you can all take this and apply it to your own lives, whether it be a business or not, or both. That's all good. I think it should be applicable to pretty much anybody. There's also a worksheet that comes along with this that I put together for you all. And if you want to follow along with that, Mihaela can put that when she gets a second into the group chat for us, or I can do it. And you can open it up and grab a pen or a pencil and follow along on your own notebook if you want to. And we'll also share that with you after the fact if you prefer to use it then. But it kind of goes along consecutively with the presentation. I can put that right here. Here it is. Here it comes. Okay. There it is in the chat. So money is the root of all evil, right? Or is it? If you don't have enough money, the lacking is the problem. How can you manage something that you don't have? So that's kind of just to set the stage for this webinar today, we're not coming at it from that perspective of like, well, if you just managed it better, because that's not always the case for everybody. So hopefully it will be a little more useful than some of that type of advice that we hear sometimes. Money is a tool and a resource. It is amoral. It is necessary in our world for survival. It's not good or bad. It's just a tool. And how we use it can be good or bad, or it can just be neutral, but we need it to survive in this society. This is something I'm going to ask you, and you can write it down, and you don't have to tell us. If you want to, you can put it in the chat if you would like to share, but there's no pressure to share. What are some feelings that come to you when you think about money? And I'm going to give you like a 30-second count to write a couple ideas down or to think of some ideas. So a couple people are in the chat sharing some of their money feelings: anxiety, stress, scarcity, fun. There never seems to be enough. Yeah, definitely. I've experienced all of these for sure. All right, let's move on. These are some ideas that I came up with kind of based on my own experiences and what I hear from other people. And some of you already put some of these in the chat as well, so you can see they're pretty relatable. All right, do you want the way you feel about money to change? Again, you can share this if you want to. You don't have to, though. No pressure. Yes. All right. And same thing here. We're going to ask you how. And this is something you can write down if you want to. You can put it in the chat if you want to. You can keep it to yourself if you want to. How do you want the way you feel about money to change? How would you like to feel instead, if you do want it to change? More control, more manageable, empowered, confident, safe, and abundance. Yeah, all great answers. All right. Again, some of you put some of these things that I thought of to put on the slide. So empowered, joy, independent, dignity, relief, feel informed, feel confident, safe. If you're just joining us, we've just talked through some of the ways that we feel about money, and if we want our feelings about money to change, how so? And we're writing things down if we want to, putting them in the chat to share if we want to, but there's no pressure to do any of that. Again, to think to yourself or to share if you want to, what is your number one goal with money? To get out of debt. Security. Yeah. What does security look like for you, or freedom? Knowledge and confidence. Yeah. Oh, no worries. So some examples on this slide that I thought of are, a number one goal with money that could feed into security or freedom. For some people, it could be a house, it could be housing in general, it could be education, it could be a family, or, keeping your family secure. It could be a car. It could be food on your table. It can be a lot of other things besides what are here. No worries if financial hardship strikes. That's a great example of like one way to feel secure with money and something that it can do for you. Not worrying about covering bills, being able to save money. Yeah. What are you saving up for? That's another thing to think about. Yeah, knowing for sure where all my money is going and that it's in the correct place, personally and financially. Very unorganized with finance. Yeah, I think a lot of us are. A lot of us didn't get that education, and it's hard to keep up with when there's a lot of other things going on too. All right, let's see what's next. All right, so here are just some ideas for first steps to get to that goal or those goals that you have around money. So I tried to break it out into like kind of where you feel like you're at with money, but I think no matter where you are, like what stage on this slide you identify with the most, look at all of them because there might be things in other stages that could inform your next steps or things you can learn from. So if you are currently in crisis, if you feel like you're in crisis when it comes to money, what expenses can be stopped or reduced for a short period of time? I know that it's always like, well, don't buy lattes, but like that's not always good advice because maybe you're already not buying lattes. Maybe you already don't have cable. Maybe you already have the lowest rent that's available in your area. What are you supposed to do now? So maybe you don't feel like there are other expenses that you can cut right now. And if you've already done that, then you can ignore that. You can ignore that part of it. Any of this sort of advice and these tips are really for you to take or leave. You don't have to feel like offended if they don't fit your situation. I hope that you'll feel free to leave them if they don't work for you. But brainstorm how to get some more money in the door for a short period of time. That could be like, is there something that you can sell? Is there a little side gig you can pick up for a little bit of time? Can you shovel your neighbor's driveway? Or is there something small that you can do, even if it's like a little bit of money, off of your expenses or a little bit more money in the door? Little bits are how it can all start. So they still matter. So if you feel like you're close to crisis when it comes to your finances, brainstorm ways to get yourself a little bit of padding for emergencies. Even like $20 to start out with. That could be set an easy first goal for you so you don't have to stress out about it. What can be automated to make things easier? And we'll talk a little bit more about this a little bit later in the presentation too. If you feel relatively stable, do you have 3 to 6 months of living expenses saved for emergencies? Do you know what your monthly living expenses are so that you can see if you have them saved? How can you make your money work harder for you? And we'll talk a little bit about that too. If you feel pretty comfortable right now, what's next? Is your money working hard for you? Are there ways it could be working harder for you without a lot of input and effort and kind of daily time on your part? What do you need to learn more about to further your financial stability? So those are just some ideas. There are a million other things, but some starting points if you're someone who feels like they need a place to start. All right, so I was kind of talking about this a little bit already, but a note about financial crisis. When you're in financial crisis and every dollar is stretched really thin already, it can be hard to hear advice about money. Just cut expenses, just save up. It's easier said than done. You're invited to take or leave the information you hear today. Please believe that tiny steps are still very worthwhile. This is for you, and any progress you make on your finances benefits you. Any little amount still counts, and it's a place to start, and it can really snowball over time. So believe that it matters. I think that's hard to believe sometimes when things are really, really tight. All right. Okay, so a quick note about budgeting because we got to talk about that, right? So knowing your regular income and expenses gives you more control over your finances. And I'm going to ask you a question now that you can respond to if you want to, or again, just think about to yourself. Why else might it be good to know these numbers, your regular income and expenses? Why would it be good to know that? How would that empower you? One example is knowing what your emergency fund goal would be. If you don't know what your monthly expenses are, then it's hard to save up for an emergency fund. So you can compare what's average for salary or housing in your area. Yeah, that's a great one. Having a full view on one sheet helps visualize. Yeah, it definitely can. If that's what works for you. Like some people's brains might really benefit from having a full view on one sheet in that way. Other people might benefit from having like these two numbers, this is what I need to know. I can go on that. It depends. And that's why, oh yeah, asking for a raise or getting a new job, definitely. Yeah. Being able to use the information to create achievable goals, exactly. Whether that be your emergency fund goal or other goals. A pay goal, I want to get to this amount of pay because I know that that would cover my expenses and I would be able to save some money then. Definitely. Some other ideas that I had down are, let's see, knowing what you can afford when you need or want something. Like, I need a new car. What's in my budget? If you don't know what your budget is, then you don't really know what's in your budget. Knowing when to start a sinking fund, which we'll talk about, and how much you can afford to contribute to it on a regular basis. Knowing where you may be spending more than you expected or less. Yeah, we'll talk about sinking funds in a second. Good question. So this is not an exercise in budgeting right now because that could be a whole separate presentation. The simplest budget you can make is one where you compare your expected income and your expected expenses to find out if you're losing, gaining, or coming out even. Once you know that, you'll come out, once you get good at budgeting and you kind of have those numbers figured out, you will come out even because every dollar will have a place. That includes savings. That's still a place for your dollars to go. It's not like, oh, whatever's left over goes into savings. It's like, if it's allocated, it's more likely to get there. There are lots of budget templates online. So you can start simple and get comfortable. And if it doesn't work for you, try a different one. That's okay. You don't have to be attached permanently to the first one that you try. You can definitely try as many as you want. And use it as a guidepost. It doesn't have to be something you're in all the time, every day, fiddling around with, unless that's something you like doing. It doesn't have to be that much pressure. It can be simple. And it doesn't cost anything to make a budget, except a little bit of time for sure. But that's one beautiful thing about it. So let's see what's next. All right, so the emergency fund. We have to talk about it. Emergencies happen, period. Not if, but when. And they can lead us to financial ruin. And we need to be as prepared as we possibly can be. It's hard to be because we don't know what they're going to be or how much they're going to cost or when they're going to happen, but we need to prepare as best we can. $1,000 is a really great starting point for an emergency fund with the goal of eventually having 3 to 6 months of your living expenses saved up. Starting small is fine. Like I said, $20, like tuck it away somewhere. That's fine to get started. Start anywhere. If it's $5, that's fine too. Add a little bit as you can. All right. Okay, so I want to go back for a second. So Brad, you had a question about sinking funds, and an emergency fund is an example of a sinking fund, and I'll talk a little bit more about those in a minute, but they're just basically like, I have a goal, I want to save up for a specific thing that's like in the mid to far future, and I'm going to save toward it. It's just a fancy way of saying that. Okay, so why a credit card is not an emergency fund. Credit cards are debt and come with a huge price tag if they aren't paid off every month. Like we're talking like, I mean, it varies, but it's like 17 to 20+% of that amount every month if you can't pay it off. So that's a huge cost And if you don't know how you'll pay for an emergency, how are you going to pay for debt plus the interest in the future? That's a lot of money. What if another emergency happens before you've paid off that debt? So more on that soon, but just something to think about. I've heard a lot of people say, I have a credit card for emergencies, and that makes me kind of nervous because I don't want people to make their situation worse going forward when they've already had an emergency. That's already emotionally taxing. It can be taxing on your time, your relationships, maybe in some cases, your finances, obviously. It's already hard enough. And then having this huge debt going forward with this huge amount of interest is really scary and can be really damaging for a long time in some cases. So, and if that's where you're at right now, that's fine. But I hope that some of these tips today will help you get to a place that's a little bit more stable and going to benefit you a little bit more in the future. Okay. Okay, so more about sinking funds. Here it is. I think those slides should be switched, but for next time. Sinking funds, saving up for known expenses. So sinking funds are an emergency fund, a car fund, a vacation fund, a house fund, things like that for like larger foreseeable expenses. And I'm saying yes, an emergency fund is a foreseeable expense because emergencies will happen eventually. These can help us avoid paying interest on loans or credit cards, which are loans. Again, so yeah, so when I was a kid, if I wanted to save up like for a bicycle with my babysitting money, that's a sinking fund. Even though it was like $300, but at the time, that was a lot of money for me as a teenager, right? So that's another example. So it can be large or small, but large-ish expenses for things like that. I think this pig is kind of creepy on the beach, but this little piggy bank kind of cracks me up. All right, go ahead. Okay, so speaking of interest, it can hurt you and it can help you. So interest is a tool. Again, like anything with money, it's a tool. You can use it to make your money work harder for you. And it's also how lenders, including credit card companies, make their money. So it's sort of a double-edged sword, if you will. So it can work for you, it can work against you. So a high yield savings account is your best friend for making your sinking funds grow. So those sinking funds, your long-term savings, your emergency fund is a great example for that. Your car fund, whatever it is that you're looking forward to and saving up for. You are going to make multiple times what you would make on interest in a high yield savings account than in a regular everyday savings account. And it's the same thing. It's liquid money, which means you can spend it whenever you want. It's not like you have to wait a year and then you can use it again. It's not frozen. It's your money to use whenever you want. You get a much higher percent interest on it. So it's great because if you're saving up for an emergency or a house or a business or anything like that, well, you're sitting there saving up for it, and it would just be sitting languishing in your regular savings account, basically losing money when you consider inflation. Instead, it's like every month you might be getting like a few bucks back. It's going to be multiple dollars, and in some cases, if you have a larger amount in there, it could be like $50 or more, which it's just happening because you saved it in there. So that's what I mean when I'm talking about like making your money work harder for you. You're doing the same thing with it. Like on the outside, you're saving it up for something. It's sitting there just like it would be in any account, but it's growing and you don't have to do anything to make it grow. It's just putting in a different kind of account. So those are something to be aware of. If you Google high yield savings account, you'll come up with a bunch of different banks that offer them. They're typically larger online banks, but you might find there's a bunch of different examples. They have varying interest rates, but right now they're usually between like 3.5% and 4% compared to your like 0.01 or 0.03% that your regular savings account would be getting. So it adds up. Okay, let's move on. I feel like I've been talking about this forever. Thanks. So that leads us to compound interest. So this is a thing that we could talk about forever as well, but I'm going to try to give a quick example and hopefully it makes sense if you don't already know what this is. So like I was talking about, okay, if you have a bunch of money in your high yield savings account and you made $50 this month on interest, next month you make interest on your original amount that was in there plus that $50 that you got last month. So that's what's compound interest. It's you're getting more money on your money every time. So it really, again, really adds up and makes your money work harder for you. So it can hurt you too, where if you have debt and that compound interest is happening, that can be like, it can be damaging, right? But make it work for you. So compound interest is essentially just interest on interest. That's the easiest way to put it. If you have $10 in your high yield savings account and you make $1 in interest, which is much more than you're going to make percent wise, but for example purposes, just go with me for a second. So now you have $11. The next month when you make your interest on that account, you make $1.10. And now you have $12.10 and you didn't add more money to your account. It grew. It's happening kind of without you having to spend time on it or thinking about it. Does that make sense? Does anybody have questions about compound interest? I'm not a banker, so I'll do my best. Okay. Okay. Well, feel free to holler in the chat or come off mute, anybody, if you have questions. Cool. Okay. It sounds like it's making sense to folks in the chat. All right, let's see what's next. Okay, so just briefly, we're going to touch on credit scores because we've been talking about debt and emergency funds, interest, and credit cards. So we got to talk about credit scores really quick. This is the only slide about it. So that's this little like rainbow looking speedometer thing that you see sometimes if you like log into your bank online, or maybe if you're going to try to get a loan or something like that, you're going to see this little icon with the green and it goes to red. I think it might be backwards. I thought green was usually on the other side. But anyway, credit scores tell lenders that you can borrow and repay money. So a credit score happens, ironically, I think, kind of from having debt and paying on your debt. So if you don't have any debt because you paid it all off, your credit score is going to drop because lenders want to see that you're using debt wisely and you're paying it off regularly. So if you're not doing that, they don't really want to talk to you. It makes your score lower, which I think is kind of interesting. But if you, so I said here, if you don't have any debt or if you have a spotty repayment history, your credit score may be 0 or a lower number. So you want to try to get a higher number. Higher number is the better with credit scores. You need a high credit score if you want to get a credit card with good rewards, or if you want to take out a loan for a large expense like a house or a car and have a good interest rate that's favorable. So credit cards are not evil. They're a tool for those with a level of financial knowledge and responsibility. It might be necessary to take a break from credit cards while you build your finance muscles. So if you found that credit cards lead you to places you don't want to be, it might be time to take a break. That's up to you. Cutting up your card but keeping your account open can keep you from using it without ruining your credit. Of course, removing it from your digital wallet would be part of that, but keeping your line open keeps your age of your credit increasing. So age of credit is one of the factors that feeds into your score. So that's something, if you want to know more about that, you can Google it. There's tons of resources online about like, what are the different factors to build your credit and how does it all really work? I don't think it's super, super hard to understand once you kind of dig into it a little bit. It can get a little bit easier, but at first it can be kind of opaque. So to build your score, you can get a secured credit card, which means you provide a prepayment for the credit amount and then you're essentially like borrowing and repaying yourself instead of the credit bureau because you've given them, or the credit card company because you've given the money to say, I'm good for it kind of thing. Another tool that I've used that is obviously not sponsoring this webinar or anything, but that I want to tell you about because I think it's been really useful for me is called Self, which is a tool where you lend money to yourself basically, but it's not through a credit card and you repay it over time. And Self reports it to the credit bureaus, which are in charge of the credit score. So it helps you build your score if you don't have a lot of credit and you just need like some data points to build your credit score off of. That's one way to do it as well that can help. So hopefully that will be useful for somebody. And they do take a fee out of the amount that you lend yourself, but for the most part, you're getting a big chunk of it back. You're just paying yourself back through basically above board in a way. That's like reporting to the credit bureaus. You're giving yourself a loan. All right, let's see. Okay, so like I said, we're getting back to automation now. So making things easier. Part of that could be just the high yield savings account and getting interest on it. That's like one form of automation. It's kind of happening on its own. You don't have to physically go in and do anything to your account other than initially choosing where the interest goes. It can go to a different account. It can go toward your credit card bill, depending on what your bank offers you. So there's other things too. Obviously, you can automate your bills. First, you have to know you have the money in your account. So that's a first step with that budgeting piece, but a lot of bills can be automated. It can save you overdue fees, credit dings, and shut-off services. Not to mention time paying your bills every month. If you have a paycheck that can also be automated, i.e. direct deposited, you can do that. I know that's not an option for everybody, especially if you're self-employed, but there may be tools out there. I feel like I've heard of something when you're self-employed that you can use to basically use direct deposit when you're able to be paying yourself. So anyway, that's something where there's different options. It's not for everybody. I understand that, but if you can do it, that can be a really nice way to kind of make things easier. You don't have to go to the bank with your check. You can just goes right in there. And then from there, you can automate where your money goes. So maybe you have a certain amount of dollars or a certain percent of your paycheck every time that goes to a certain savings account, your high yield savings account. And that can really help curb impulse spending because the money's not in your checking account then. It's already been put to savings. You didn't have to touch it. You didn't think about it. It just goes in there. And then every so often you can go and look at your savings balance and go, sweet, I'm halfway to my goal. And that's pretty exciting. At least I think it is. All right. Oh yeah, Kate said her student loans were forgiven and her credit score dropped, which I believe because yeah, if you pay off your loans, that's one thing that can happen, is that now your accounts are closed. And so your credit, the different lines of credit that you have and the age of your credit can drop from that. So this is sort of a cheesy example, admittedly, but trying to illustrate some of this for all of you. An example in automation. So this fictional character Allie is paid twice a month from her part-time job. She uses direct deposit to put her paycheck into her checking account automatically. She's set up her online banking account to then automatically transfer $50 from her paycheck into her high yield savings account at the same bank. Her electric bill and credit card bill are both automated to come from her checking account when they're due. So she doesn't ever have any overdue bills. Her electricity isn't going to get shut off. She doesn't have to deal with that. Nobody's calling or bothering her about it. Because of her direct deposit, Allie knows she can cover her automated bills every month. She also is saving for her emergency fund. So something I didn't say is some different savings accounts, especially the high yield savings accounts, can have like buckets or vaults. They call them different things, but they're basically they're not really separate accounts, but they're like sub buckets that you can say, okay, I'm saving for this specific thing. And then you can set a goal so you can kind of see where you're at with your goal. So if you wanted, okay, I know now what my monthly expenses are. And so for my emergency fund to be 3 to 6 months funded for my expenses, I know that equals this many dollars. And you can set that as your goal. And then each time you put money in there, it shows you that you're closer to your goal. So that can be kind of fun and kind of helpful. As Allie's emergency fund grows, she decides she would also like to save up for a special occasion. So she uses buckets or vaults in her bank account. Okay, I jumped the gun on my own self with that one. But now she has 2 sinking funds, her emergency fund and her special occasion fund. Say it's a vacation or whatever. She has goals for both. So she has those set up, and maybe she's got the $50 going into her high yield savings account, and then she can even automate if she wants to from there 25 of that go into her emergency fund and 25 go into her special occasion fund, or whatever that looks like. Because they're automated, Allie can rest easy knowing that her money is working for her and growing too. And now, later down the line, she ended up getting a side gig, planting flowers for her neighbors and community members so she can put more money to work for her. So this is, I understand, kind of like a simple, oversimplified, idealized example, but I just wanted to show you like one way that some of these different tools and tips could be implemented in someone's life and kind of work together to help them grow their money without having to work a whole lot harder to do that. All right. So now we have time for questions. Like, this has obviously been a very kind of starter level chat. I want to know how you're feeling now. Do you know what you'll do next? Like, what is your next step when it comes to your money? I hope you'll use this kind of as you need to make your money work as hard for you as you work for it. You deserve a stable and prosperous life. I have a couple more slides after this for you regarding next programming that we have coming up and our contact information and all that stuff, but I'll keep it here for a second so that we have time for questions. Questions, comments, criticisms, concerns. Was this at all useful for anybody who's here? Good, okay. Yep, okay. Budget could be one thing to focus on first. Yep, helpful, good, yes, great. I wish I knew about high yield savings accounts sooner, because the amount of interest I lost over so many years just not knowing and having my money in a basic savings account that didn't make anything kind of makes me sad, but you live and learn, right? Getting rid of unnecessary spending. Yeah, that can be a great start too. Just have to execute. Yeah, I know. And that's something for me too. Like, it can be overwhelming, even if you know the things you need to do with your money, and where do I start, and how do I have the time to sit down and do it, and what if it's hard, and what if it's a lot of paperwork, and what if I forgot my social security number, and or whatever it is. It can be kind of overwhelming. So I hope that some of these give you like an idea of one thing you can do to start that will be a little bit more bite-sized. Ooh, Britt has a book recommendation. Is it a book or is it a website? I'm assuming it's a book. App. Oh, an app. Okay, cool. She says it's an app called You Need a Budget for getting started. Cool. Local bank, the spending info just doesn't upload and download. Okay. And that's another thing. Some of these high yield savings accounts come with really awesome apps too, where you can really see where your money's going, what it's doing, what's your total that you own at any given moment, and some of those different insights. What are you spending on, like different categories, things like that. And it can be a little bit more, it can be really illuminating about like what's going on with your money, because sometimes if we can't see it, it's like we don't really know what's happening. So it can help visualize some of that. Any other tips that people want to share that they know about that we didn't cover here that might be useful for the other folks who are on the call? What did I miss?
I always try to look for a credit card with just like general cash back, like
Mm,
unrestricted cat, like 5% cash back or something. And then I put
mhm.
any like Like I automate really important things like my mortgage payment and my car insurance that I don't want to be disrupted to come out of my checking account. But then things
Hmm.
like groceries and gas, or like if there's a streaming service I pay for, that all goes on my credit card. So then I'm earning cash back on all of those too. And then like after a few months, you can look in and you're like, oh, I have like an extra $100 that I didn't have before. And so
Hmm.
that's kind of like a nice little bonus, and I just use it to pay off, like to put back on the credit card expense. So it's not as
Hmm.
fruitful as a high yield savings account, but it also is like, it doesn't hurt either.
Yeah, absolutely. Still definitely helps. And all of these little tools combined together can really, I think, are really what can add up to something really substantial. Any other like tips or tricks that you all have learned about or are using or want to use, or questions too? All right. I'll give you a minute to think about that. And if you think of other things, feel free to put them in the chat. But I'm going to go through these last couple slides that I have for you about some more programming we have coming up. And for the folks who are with us this morning, I'm sorry this is a little bit repetitive for you, but we just want to make sure everybody knows about what else we have going on in case you want to utilize it, or if you know somebody who does, who might. Awesome. So upcoming events programs from Inca, we have our Entrepreneur Roundtable, which a couple of you were at this morning. Thanks for being there. Those are going to be monthly, the first Tuesday at 8 a.m. Through March. We have the wealth management. So other topics in this particular series about financial empowerment that are coming up. We have wealth management is for everyone next. And we have prepare for retirement starting today, keeping business and personal finances straight, employee benefits for small businesses, future planning for you and your business, insurances to be familiar with as a business owner, and we'll see if we add any more, but for now, that's our lineup. We also have in late March coming up our Adirondack Buyer Days, which is a wholesale trade show for micro and small maker businesses and retailers. So and that comes with preparatory webinars for folks who might just be starting out or want to learn more about it. Adirondack.org/events is where you can find all of that and register or apply or whatever the case may be for each different thing. Thanks, Mahela, for putting that in the chat. Tons of stuff coming up. And yeah, so I want to tell you how our work is funded. We utilize federal, state, and local grants, philanthropic dollars, event fees, donations, and memberships to keep working for you. So your participation today is greatly appreciated. It really helps us out, and we're glad that you're here. We want to support you, and we appreciate you supporting us as well. So at adirondack.org / or underneath support on our website is where you can see more about that if you're curious. And I think we have one more slide. Yeah. So for more information, if you need more help with your business or just generally, please feel free to contact us. This is our contact information, Mahela's email address and extension, and mine. We can help you navigate other services at other organizations as well. We're happy to point you kind of wherever you need to go based on your location and your needs with your business. And so you can also find that on our website too, or you can just feel free to reach out to us directly. And with that, we have about 10 minutes left if anybody has more questions or thoughts, and otherwise we'll send you on your way.
Thank you so much, Lauren.
Thank you. Thanks for being here. All right. Thanks, everybody. Really appreciate you being here. I hope you have a good rest of your day. And please don't hesitate to reach out to us if you need anything. We'll do our best. Take care.